Today in this video, we're going to talk about how you can buy a house when you have a lot of student loans. Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker here in Nashville, Tennessee, and my firm is Southern Living Realty Partners. Today, I want to explain how I personally was able to buy a house with a lot of student loan debt, because I know this is something that's facing a lot of my clients and potential clients here lately. And let me give you just a little bit of background on myself. I've been a real estate broker here in Nashville for 22 years. Previously, I had my own branch of a mortgage company. I was a originator, the underwriter, the processor, the funder, the post-closer. I've done it all. I worked at Regions Bank as a processor. And most recently, I have been with the U.S. federal government as an underwriter for the USDA loans, the rural housing loans. So I've been in the game a long time, and I've had a lot to do with mortgages. First of all, when the market crashed in like '09, man, it was devastating. It was devastating. I'm telling you, I mean, like everything dried up. The mortgages, the just the real estate sales, everything. It was horrific. And I was a single parent with 2 kids. You all have especially heard me talk about my son. My son at the time was 18 and my daughter was 10. And I've always been a single parent. I talk about my husband. Me and my husband have just been together for 6 years. So all through my kids coming up, I was a single parent. So when the market crashed and mama wasn't making no money, mama had to do something. And I'm a hustler. I always believe, there's ways to make anything work if you just study it, if you just read. Reading is fundamental. People who know me know I say that all the time. Reading is fundamental. So just read, just pay attention. So my hustle to get by, just to be quite honest, was I went back to school. I had almost completed my associate's degree when I joined the Army, and I went to Desert Storm and all that good stuff. So, and then when I got out, I never went back to school. I was just, getting my hustle on. And so school and the student loans became my hustle, just to be quite honest. That's just how we survived. So I went back to Nashville Tech. Okay, it's not Nashville Tech now. It was Nashville Tech when I went. It's like Nashville State Community College now, okay? But I went back to Nashville State, and I finished that, honor roll, everything. Oh, okay, wonderful. Because at the time, in '09, I was like 39 years old. So after I finished at Nashville Tech, I went to American Public University. Go Volunteers, okay? And simply the reason why I chose American Public University is because of the cost. It was an accredited online, 100% online college. And it was accredited. And because at the time when I went back to school, my son was starting college. And I was like, I am not finna be sitting in class with some 18-year-olds. Okay, let's just be quite honest. So I went to American Public University, and I know there are a lot of my, that's the school that Walmart pays for, or pays part of the tuition for their employees. And so it was a lot of people from Walmart, in my classes and everything. Shout out to my classmates. So I got my bachelor's degree in 2016 in marketing. And then I took 6 months off and I went back to school. No, I got that in 12. I got that in 2012. And then I took 6 months off, and then I went back and I got my master's degree in 2016. I say all of that to tell you this. Yes, I've always been a lifetime learner and everything, but It was about that money. It was about that student loan money. Because I looked at it like this. I didn't have that much income coming in, because the market had crashed. And student loans, that's some of the cheapest debt you'll ever have. Some of my student loans is like 3%. I think the highest maybe like 6.5. But that's still cheap money. And second of all, my goal was, I said, okay, then I'm going to go work for the federal government and do the 10 years and get the student loan repayment, and I won't have to worry about it. So I never really looked at the student loans like a big burden. And that's just me, just being honest. So during my time as underwriter at USDA, we used to count 1% of the loan balance, and that's one thing you'll run into a lot of times now, even with your Fannie Mae products, is they use 1% of your balance as your payment if you're in deferment, or if you're still in school or whatever. So this is what I did. I got to reading, and first thing I did was to do the student loan forgiveness. I had all my loans consolidated because I had a whole bunch of different loans. So I had them all consolidated. I went to my loan servicer, who was Fed Loan, and I got them all consolidated into just one loan. Okay. So then I went on the income-based repayment, which made my payment $0. And here's another tip for you. One thing I do, me and my husband do not file our taxes together. I mean, we just don't. So therefore, it was only based on my income. And plus I had kids in school. My son was in school. So there was another, person in college and everything. So my debt to income, as far as the student loans was concerned, I didn't have any money to pay the student loans, so my payment was $0. Even with the student loan forgiveness, even if your payment is $0, that monthly payment of $0 counts towards your 120 payments. Now, I'm not even going to get into the student loan forgiveness thing right now. I'm not even going there because, there's a whole lot of mess going on with that right now. So, but I'm just telling you what I did, what my plan was, okay? So I get on income-based repayment, and so my payment is $0. But in order to qualify for my mortgage, when they counted my debt to income, they were counting 1% of my student loans, which was blowing my DTI, my debt to income, out the water. Okay. So I got to reading, and did you know that you can change your student loan repayment plan 2 times a year? Every year. So, and I knew that in USDA's guidelines that I could change my plan and I needed to be on a fixed payment plan. I couldn't be on income based. I couldn't be on pay as you earn. None of those will work because that payment will vary. It'll fluctuate, okay? You're going to need to get on a fixed repayment plan, okay? So, if you have over $30,000 in student loan debt, you can get on an extended fixed repayment plan. Write that down, extended fixed repayment plan. And what happens with the extended fix is it amortizes your loan over, it's either 20 or 25 years instead of the standard 10 year. See, when they amortize it just over 10 years, you're going to have a much higher payment because that's dividing your loan amount by just 120 payments. Whereas if you go to a 20 year or 25, it's amortized over 240 or 300 months. So that brings that payment down. So what I did was I went on extended fixed, and I changed my plan with my servicer, and then I got my new payment, and I knew I had to make at least 3 payments. Because as underwriters, that's what we want to see, at least 3 payments have been made on that new repayment plan. So me being the overachiever that I am, I paid it for 6 months. I paid that extended fixed payment for 6 months. Now, yeah, it was a whole lot more than that $0 I was used to, but it was a whole lot less than that standard repayment. Okay. And that's the one to be blowing you out the water. And it was a whole lot less than that 1%. It was a whole lot less than that 1%. So my debt to income worked on the extended fixed repayment. Okay. Now, so what I did was, like I said, I paid it for 6 months because in the process, I was getting everything else together for my VA loan, because I was using my VA loan again. So I was getting everything in order. You need to start early, getting your stuff together. Go to annualcreditreport.com. Get that credit report. See what's on there. See what's not reporting right. Get your stuff together. Pay down your revolving debt, like your credit cards. But that's another video. So by the time we found a house and got in contract, I had paid my student loan on the extended fixed payment for 6 months. My DTI was fine. So we closed. Everything went swimmingly because I had the income and everything. Just like so many of you all who come to me and want to buy a house, you're working, you've been working. It's just an issue of your debt to income that we got to make work. So like I said, I made the payment. My debt to income worked. We closed in June. July, I changed my repayment plan back to income-based repayment. And I went back to a 0 payment. And again, those 0 payments still count towards my student loan forgiveness. Is the student loan forgiveness going to be there by the time I get finished? I don't know. I'm not worried about that today. I'm just telling you what I did to get into my house. So some of you out, if you're carrying over $30,000 in student loan debt, you should look into changing your repayment plan and doing the extended fixed, where the payment will be lower. Make that payment for at least 3 months, so the underwriter can see that you've been making the payment for at least 3 months. Get your DTI working, get in your house, and then change your repayment plan. That's what I did. That's what I suggested you do. Again, my name is Rhonda Burgess, and I'm a real estate broker here in Nashville, Tennessee, and my firm is Southern Living Realty Partners. If you need help with knowing what to do to qualify for a mortgage, you need help finding a home here in the Nashville area, please feel free to give me a call. My number is 615-554-0832, and I would be glad to give you any information or steer you to the right mortgage person who can help you. Thank you for watching. Please subscribe to the channel, as I will be adding more videos in the coming days, all about what you need to do to get in a house and all about living in the Nashville, Tennessee area. Thank you, and as always, have a blessed day.